when you inflation adjust and you look at it relative to how much devaluation has occurred and how much M2 has been created and actually what gold prices have done, we're actually not at a high. Now, I think we'll get there. If we have a blow-off top between now and Thanksgiving, yeah, we'll have a correction. And my guess is the correction is always proportional to how far you are away from fair value. So if you're 50%, if you're 100% above fair value, you got to drop at least 50. But then you normally go another 50 of that 50, so that's another 25, so you get down 75. In a world where a bunch of old white guys, I hate to say it, but a bunch of old white guys decide what the interest rate is, that's not a free market. That's market manipulation.
Mark Yusko begins with a simple but profound truth. There's an inevitability about Bitcoin's price rising, not because of hype or speculation, but because fiat currencies are being devalued. Across the world, governments continue to print more money, dollars, euros, yen, lira, and each new round of currency creation dilutes the value of the existing supply. When you measure Bitcoin in US dollars, it might look volatile. But if you measure it in lira, bolivar, or peso, Bitcoin has been making all-time highs for years.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
There's an inevitability about Bitcoin's price in dollars or yen or euros or whatever you want to price it in, rising as countries devalue their fiat currency. And the more they devalue, the higher the price. You know, it's funny. Most of us talk about Bitcoin in dollars. That's our kind of reference point. But like if you looked at Bitcoin in lira, it's been making all-time highs for years because the lira has literally devalued 99.9%. Same thing in Venezuela. So there's this, I call it home market myopia, where one, you think all the smart people are in your home market, which is clearly not true. Two, you think you dominate every market. Like, all the stocks are traded in the United States. Well, that's not actually true. I mean, some of our stocks now are crazy valuations, so they dwarf, NVIDIA dwarfs the entire Japanese market in the MSCI World Index. I mean, and Spain and France. And so that can definitely happen. But in digital assets, I think it's interesting. You got our president saying, oh, we want to be the crypto capital of the world. And then the Bitcoiners are like, no, we want to be the Bitcoin capital of the world. Okay, fine. But neither one's going to happen. When you inflation adjust and you look at it relative to how much devaluation has occurred and how much M2 has been created and actually what gold prices have done, we're actually not at a high. Now, I think we'll get there.
Sure.
And then the big question on everybody's mind, and yesterday was interesting, October 6th, we're recording on the 7th. October 6th is interesting in that if you look at the previous two cycles, the 17 cycle and the 21 cycle and now the 25 cycle, if you look at 17 and the 21, the time from cycle peak to low is 364 days in both of them, precisely. And then the time from cycle low to cycle high is 1,064 days. And so 1,064 days from the previous low was yesterday. And what's crazy is there's a guy, and I wish I could remember his name so I could give him credit, but I saw there's this guy that tweeted in 2023, 2 years ago, that the simulation will be repeated and the new high will occur on October 6th, and then we head back down.
That's pretty wild.
Wow. Now, there are a whole bunch of people who are like, no, we're going to the moon by the end of the year. I mean, maybe. So there is an argument that says, well, we're not going to have a cycle this time because of all the things you said, all the new institutional demand. But the level of the bear market, I believe, will absolutely be less If we got to 175 or, 200 and we're 50% above, the bear market might be, 55, 60%, but it's probably not going to be 75 or 84% like the first couple. So to me, a correction, again, humans are going to human, we push things up too high, like AI stocks right now, or quantum computing stocks right now, or nuclear stocks. I mean, we pushed them to levels that don't make any sense, and they will correct. Now, some of them, like the quantum stock, they might go down 99%. I don't know. But if we peak, if yesterday was the peak, we might never go below 100K again, right? Because there's just no downside pressure. We might just kind of fluctuate like this for a while, and then this fair value will keep accreting at 5-6% a year as they devalue currency. And, we just have this nice, steady, boring asset. If we have a blow-off top between now and Thanksgiving, yeah, we'll have a correction. And my guess is the correction is always proportional to how far you are away from fair value.
Sure.
So if you're 50%, if you're 100% above fair value, you got to drop at least 50, but then you normally go another 50 of that 50, so that's another 25, so you get down 75. Now, if you're really super crazy, like, the U.S. stock market in 2000, you go down 84%. Bitcoin in 2017, you go down 84%. Bitcoin in 2021, you go down 74%. So if you get crazy, then your drop is bigger. Bitcoin dominance and stablecoin dominance are totally logical, right? Stablecoins is payment rails to replace, Visa, MasterCard, whatever, Venmo, PayPal. That makes perfect sense. Bitcoin as digital gold makes perfect sense. All the other use cases, I can see them and I can make an argument why they could work, but they're fighting up against incumbents that have a lot to lose.
Sure.
Whereas gold, there's really no one. I mean, I guess the gold miners have stuff to lose, but they're not big enough to matter. So they can't really fight against Bitcoin becoming digital gold. They're just not going to do it. But the banks can still fight. So we'll see how that goes. But I think it is a good point, and I'm not the extreme. There's Bitcoin and everything else. It's a scam. I don't believe that. I do think, Ethereum, Solana, Avalanche, smart contracts, I think, have a role in the future. I really do, and I think they're good. And Sui is an interesting protocol, and I keep hoping Chainlink does what they tell me they're going to do. And their army is like, you're missing that. Look, I would love there to be interoperability.
He doesn't dismiss other blockchains outright. In fact, he believes Ethereum, Solana, Avalanche, and Sui have legitimate roles to play in the future of decentralized computing and smart contracts. He's especially hopeful for Chainlink, a project aiming to connect real-world data with blockchains, though he jokes about still waiting for them to fully deliver. Yusko's point is simple: liquidity drives markets. And as liquidity continues moving into digital assets, the entire system of finance, payments, contracts, identity, and ownership will shift with it.
100%. Liquidity drives markets, one of my favorite things to tweet. And at the end of the day, this is money illusion, right? Stocks are not at all-time highs, right? I mean, yes, nominally they are, and you can't debate that. But in real terms, meaning if you price them in anything other than, the toilet paper, which is the US dollar, or the yen or the euro, which you're going to race to the bottom to devalue, if you priced it in anything solid, pun intended, like gold, here's the crazy stat. Stocks are down since 1900, priced in gold.
Wow.
They're actually not up. Now, you say, but that doesn't count. I'm like, well, it kind of does. And look, most of us don't feel it when things are more expensive. Our rent is higher, the price of a hamburger is higher. You're up in New York, New Jersey. There's this place in downtown New York where, they only take cash and there's a huge line and you get the privilege of paying $30 for a hamburger. And I went once with one of my guys, and it was a perfectly fine hamburger, but it wasn't like 20 times better, or 10 times better than the other hamburgers I've had. Sure. In fact, I probably prefer Shake Shack's hamburger over that. But that illusion is what's happening when inflation, right, which robs us of our wealth. And for most of our existence, up until 2009, there was no alternative, right? You lived in the fiat world. Everyone lived. We lived in the fiat world. We earned dollars. We tried to save dollars. But the problem was, in saving dollars, if we didn't put them at risk, like if we just put them in cash, then every day they're stealing a little bit back through this thing called inflation. And what's really funny about inflation is the normal state of a productive, innovative society is deflation, not inflation. What do I mean? When you think about it, if you innovate, then you make things better, right? You're getting more for the same amount. That's deflation. Or cheaper, right? You can produce more, like the Model T Ford. We discovered the assembly line, and so cars started to go down in price. And from 1776, when we started as a republic, till 1913, there was no such thing as inflation. We had a persistent deflation. Now, it was interrupted by a couple big wars and a depression, like the depression of 1848 or something like that, was worse than the Great Depression, but no one ever talks about it because it's too long ago to remember. So in 1913, the Fed was created. And what does the Fed do? Well, the Fed artificially manipulates markets. So free markets are prone to deflation. Because if I can compete, let's say there's some provider of a good or service. If I'm in a free market and I can compete against that person, I'm going to try to win business by maybe underpricing or making something better, both deflationary. Well, if the market's not free, right, if there are barriers or tariffs or restrictions or regulations, then you tend toward inflation. Well, if you manipulate the price of money, meaning in a free market, people would bid openly on the acceptable return that they would take for safety, right? Someone would say, well, I need 6%. Someone else say, well, I need 5.5%. I need 5%. I need 4.5%. And there's a natural market clearing price for risk assets. Well, in a world where a bunch of old white guys, I hate to say it, but a bunch of old white guys decide what the interest rate is, that's not a free market. That's market manipulation. And so in that environment, you get a persistent theft, and I use the word intentionally, of real wealth from the masses to the few.
The illusion of prosperity and the role of Bitcoin. In the end, Mark Yusko returns to the core theme, illusion versus reality. Nominal prices, the numbers on your brokerage screen, are deceiving. They rise not because we're wealthier, but because our money is worth less. That's why Bitcoin is revolutionary. It's not a speculative bet, it's a measurement tool for truth. It exposes how much purchasing power is being stolen from savers, how manipulated interest rates distort asset prices, and how deeply broken our monetary system has become. For over a century, central banks have engineered inflation to enrich the few and quietly erode the wealth of the many.